Oh, hi, I'm Joe. I didn't see you there.
Banging the table.
Banging the table. I'm Joe, and I'm going to tell you.
I'm Taylor. Well, you can't say you can't tell you then introduce somebody.
Yes, I'm going to tell you. That's Taylor. He's our production. He's our editor. He's our everything. He's here.
Hi.
Yeah. So we talked about what? Trump care last time?
Last week was a Trump care.
Frickin' our number one fan, Dre.
Yes.
He's always like asking questions, and he's on our Facebook, social media, whatever. Mm-hmm. Get in on it. Let him know. Ask him how much he makes, because we brought that up on the last segment, and it was probably going to be really embarrassing for him. Get it out of him. I don't know what he does. So talk to him, people. Harass him. What is it? Troll him. Yeah. Troll Dre.
Yeah. He'll love that.
He'll love that. He likes it. He wants the attention, guys. Come on. He doesn't. We went over last show. He doesn't make that much. We gotta help Matt over there. We like talking crap on our fans. That's like what we do all the time. So we like to bring it up all the time. We had like a thing about bringing up Bob last time.
I was saying, missing the Bob talk.
They're missing the Bob talk. Now we're talking about Dre. Now it's all about Dre.
All about Dre.
Yeah. We don't want to be like next week's show and forget about Dre.
Hey.
I
was waiting for it.
He was waiting for it. It's pretty good. Okay, so here's the thing. We talked about healthcare, how it affects you. We came to the conclusion that if you're middle class and you make a regular income, basically you're not getting a tax break. Trump is going to try to reduce the rates a little bit, but you're probably not going to see anything. Nothing's going to happen to you. If you're rich and make a lot of money and you have a business, you're probably going to get a tax break. And if you're poor, you weren't really paying anyways. So nothing's going to happen to you either. So on this show, we try to tell you the real stuff and what really goes on. So what's been happening recently is the Trump tax plan, right? Trump taxes. And what have you heard in the news about the tax plan, Taylor?
Nothing. First time I heard about it, actually. I don't watch the news. If it's not on YouTube or Twitter, apparently it is. But it's not one of my channels I watch.
Okay, so I pay attention to this stuff because I have to for the show.
Yes.
Taylor pays attention for the stuff for We Tell You, which is our other show. Uh-huh. But I went to every mainstream media site, and all you're hearing is tax plan for the
rich.
For the rich, right? For the rich, for the rich, for the rich, for the rich. Okay? And what they're saying is it's not going to help you or the middle class at all whatsoever, right? Okay. That is total, complete, and utter bullshit. And we don't like to really cuss on this show and stuff like that because it's a family show. Finance is a family deal, right? But the problem with listening to all this crap right now in the media and everything else, everyone's all about being partisan. What's partisan, Taylor? It's choosing sides, right?
Sounds good to me.
Yes, exactly. So basically that's what it comes down to. You're choosing sides. So on this show, we're on the side of success, money, individual liberty, entrepreneurship, things like that. Though that's at least what I am on the side on. Taylor?
Sounds good to me.
Well, yeah. Taylor has to be on that side. He is an actual entrepreneur and he has businesses.
Yes.
So, and we've also worked and had regular jobs. He has a regular job. I've had a regular job. We've all done the whole thing. We've done the thing. We've worked at the minimum wage. We've worked at crappy places. Yes. Target. We've worked at good places, things like that, right?
Yeah.
So we know how it is. We get it. We understand. We've paid taxes. We've not paid taxes. We've been on unemployment. I've been on unemployment. You've been on unemployment?
No, I have not.
Well, I've been on unemployment.
I was never apprenticed.
See, I'm like a buffet eater with finances. Like, I've experienced it all, from being on welfare growing up to being at a corporate job and making a good living, and then being on unemployment and doing nothing, like just kicking back, watching TV, eating, stuff like that. Proud user of the system right there. So I've experienced all of it. I've done all of it. I've done every aspect of it, things like that. Taylor has something called pride, to where he's never been on the system, things like that. But I have. I've been in the system, out of the system, railroaded by the system.
Yeah.
You name it, I've done it. So I get it more than most people. I've done the whole thing. So I started businesses. I've paid a lot of taxes. I've paid the corporate tax. I've paid the personal income tax. I've paid the self-employment tax. Done all of it. Taylor, what have you done?
I pay taxes out of my paychecks.
I know. So he's like most people. You don't even know what they are. You're just like, I just want to know what I get, and that's what I know about money. Everything else means nothing to me.
Which we covered on a past show concerning taxes and stuff.
Which we covered. We've gone over there, right? So what does Trump's tax plan have to do with you? Really? Like, literally, what does it have to do with you?
I don't know.
Yeah. Well, I'm going to tell you.
Okay.
Because this is Joe Tells You. That's what I do.
So it is.
And then we're going to go away from the Trump topic, because I know it's dead and everyone loves hearing Trump this and Trump that, Trump whatever. Remember, we are not on the side of Trump. We're not on the side of Hillary. We're on the side of making you money and successful. So whichever side that lands on, whoever's politics it is, that's what we're going for here. So Trump's tax plan, let's talk about it, how it affects you, how it affects businesses, what the deal is, right? So Taylor's heard a tax cut for the rich.
Yes.
Right? So that's the thing. Well, what is rich? Taylor, what's rich?
Define rich that, well, it depends on your area, really. Or is it really your area, or do they have a national, a line of where this is where you're considered rich or upper class?
And that's great, because we're going to talk about all this stuff on We Tell You and stuff like that, right?
Yes.
Well, in San Mateo, California, rich is
$80,000.
106.
106.
Close,
sorry.
right? In Orange County, California, rich or poor is
80,000.
exactly, right? So it's all relative to where you are. So in Orange County, came out an article the other day. In Orange County, below $86,000 a year, you're considered low income. And in San Mateo, you're considered at 106,000, you're considered low income. So rich, the argument over the years is relative to that. So the poor in our country are classified under as really actual poor, like as in very, 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 very low income. At risk is like $30,000 a year, right?
Yes.
So Joe Rogan brings this up on a show a lot, and we don't fact check Joe Rogan around here. We just take whatever he says as gospel over here. He says that $30,000 a year of income is poor here, right?
Yes.
But around the rest of the world, in comparison, that is actually high income, right? So the stat on this. So we'll talk about this. So 30,000. We always like doing live stats on the show. We don't have a producer who looks up the stats on the show. Taylor is filming. He's also talking
and monitoring the
audio levels. And he's also doing many great things around here. So we don't need to put one more thing on him over here. So
please don't.
World, let's see what it comes up. World income. Let's see. Okay.
What about if you live like in the flyover?
Here's what it is. So 34K a year. Okay.
Yeah.
Is you are in the top 1%. You know, in this country we hate 1%ers.
Yes.
Yeah. I mean, you hate them.
Yeah.
Yeah, but I don't hate them and I'm gonna tell you why. Because you're gonna be the 1%.
All right.
Soon. I think you're the 5%, right?
Yeah.
So like people would hate you because you're 5%, but you're almost poor in Orange County.
Yeah.
Exactly, right?
Them together.
But so we hate the 1%. So what does the 1% earn in this country? I don't know. People just make it up. People are like billions and millions of dollars a year. That's not true. If you make $34,000 a year, you are in the top 1% of the world in income. Do you know that, Taylor?
Not until now. No, I didn't know.
That's right. You're the 1%. So basically, if you earn 34 grand a year, you're the 1% in the world.
Give me the mentions.
You're the 1%.
Yeah.
Yeah. You are a gazillionaire if you earn 1% in the world. So the 1% in the United States, in America, this is the 1%. If you earn it's the highest tax bracket. If you earn more than $415,000 per year, you would be in the 1%. So the middle class of this country, you would earn between $75,000 a year to $231,000 a year for your household, approximately.
That's middle class.
That's middle class, right?
Okay.
Poor would be 0 to 18,000 individual like a year, and then Lower middle class would be 18,000 to 75,000. Middle class would be 75,000 to 151,000. Upper middle class would be 151,000 to 231,000. Guys, get all those numbers I threw out at you over there?
We love numbers on this.
So, wherever you fall, blah, 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 whatever. Who cares? Anyways, what I'm telling you is that we're getting taxed a lot and we're not necessarily rich. And here's the problem with that. So, if you earn $37,000 a year, you're taxed at 15%. If you earn above that, you're taxed at 25%. If you earn 91 to 190 a year, this is that one. That's a single. If you earn 91 to 190 a year, you're taxed at 28%. So how does this work out for you? So we've gone over what middle class is. We've gone over what poverty is. How does this work out for you individually? Well, the current tax brackets, we have 7. The tax brackets, the things I was telling you right now, those are the tax brackets. Mm-hmm. So here's what Trump's plan is, and here's how it affects you. So I'm going to tell you right now. Corporate tax rate would be 15%. So right now, corporate tax rate, they have tax brackets. The top corporate tax rate is like 35 or whatever percent, right? The current federal statutory rate's 35%. He wants to lower it to 15%. Taylor, fair or unfair?
Unfair.
Okay, unfair. All right. So allow a pass-through rate for business owners. So instead of self-owned businesses being taxed at the personal income tax rate, business owners would have income from operations taxed at 15% rate. So if you own your own business, income from that business would be taxed at the corporate rate, and that could apply to Trump's organization. So self-owned business, what's that?
Is that what we talked about? Is starting a business or the video?
Yeah, that's a DBA, LLC, stuff like that. So, for example, if you have W-2 income and you earn money, you get taxed at a lower tax rate because part of the tax is paid by your employer and you also pay a tax on that, right? So anything you make outside of that, like when I pay business taxes, because most of my taxes come from business, I pay a self-employment tax rate. So I'm paying more taxes, right? So right now, self-employment, you pay double the taxes that a normal person would pay, right? So how that comes down to exactly, we've been over this stuff many times before on this. But basically, if you make, did we go over our handy apps? Sorry, I got
Yes, we did. That was
my text was in there from Eric Reese. Shout out. He was telling me about his new website that was out. Sorry.
Wonderful.
He was on the show. He was distracting me over there. Watch our show, Eric. We mentioned you. So we have our calculators, TaxCaster. Okay, here it is. All right. So let me do an example so that we know about it from your exact perspective. All right. Taylor, are you ready? Are you comfortable? Are you comfortable with this?
Possibly.
Or not comfortable with this?
Let's talk.
Okay. How much do you make per year?
You don't have to tell me exact amount.
Let's just pretend. How much you got? What do you got?
58,000.
Okay, $58,000 a year. Okay, guys, he really makes it. He gave you the real number. Okay, so 58,000. Okay.
Yeah.
So your taxes at 58,000, if it was all business income, are $14,860.
That is what I can get back at the end of tax season, right?
No, not if you own a business. There is no getting back because you don't get taken out of your paycheck. You get a bill at the end of the year. Basically, when you get taxed as a business, your revenue comes in, and at the end of the year, you have to tell the IRS what you owe them, and that would be your tax bill, right? So let's do that because people don't know this. They have no idea, right? So let's just say that it was your pay, okay? So 58,000 is your pay, right? Okay.
Allegedly.
Federal taxes withheld, 0. Stuff like business income. My business income was set at minus 100,000. Now we know how I do my taxes. So your taxes due for your business income is that we did it at 0. So this is your actual wages. Your taxes are $7,690.
So half that.
Half that.
I can see you.
Looking at you over there.
I got you.
Half that, right? So if you own a business, you're taxed double than if you worked for somebody. Right?
Isn't that being punished for being successful? Punished for being successful?
Well, your business is paying a corporate tax. They're also paying taxes for you to employ you, right? And also, you're paying taxes as an employee. So I'm going to ask you again.
Ask me again.
The current federal statutory rate for taxes is 35%. Trump wants to lower it to 15%. Knowing that owning a business, you pay double your taxes, do you think it's fair?
No.
So now with little information, it doesn't seem so fair, does it?
I said unfair last time too.
Well, you said it was unfair that they got taxed at 15%, right?
Okay.
Whatever. So now that knowing that they pay double the taxes, do you think it's fair to reduce their taxes or keep them the same?
Keep them the same? I don't know. I hate being put on the spot.
I know. Well, I'm just, hey,
Hi.
just think about it. That's all I'm saying. That's all. So basically, businesses do pay more in taxes and they have a lot of expenses overhead and they also take the risk, right? So like when you say McDonald's is a $1 billion company and making billions of dollars of profit,
Yes.
should they pay workers more money, right?
Yeah.
Okay. So what if they're not making any money? What if they're losing billions of dollars? Should they pay their workers more money?
Well, they should keep them the same, I guess. I guess whatever makes more financial sense for them.
Exactly,
It is
right?
a business in general.
So if a business loses money, they have to pay their workers the same.
Yes.
If a business makes a bunch of money, they have to pay their workers more, right?
They don't have to, but they have the option to.
They have the option to, right?
Yes.
So as an employee, you can never get paid less, ever, always the same. But the business, if they make more money, they have to give you more money. If they make less money, they have to still give you the same amount of money.
Okay.
Just think about that.
Okay.
That's all.
Gotcha.
So think about that. So a business has risk, but when they have reward, they have to share it. But when they have risk, they don't. The employees or whoever they're paying or they're giving money to don't have to take the risk with them, right?
Okay.
So that's what that is, right?
Isn't that kind of insuring your employee?
Well, it's like it's example like, is it fair? Is it not fair? It's just the reality of owning a business, right? So basically, like if you own a business and McDonald's goes billions of dollars in the red and they're going to go bankrupt, right?
Yeah.
Do they have the right to not give you a paycheck? No, they still have to pay a paycheck,
yeah.
right? Right?
Yeah.
So workers have something called guaranteed wages, right?
Yes.
But billion-dollar corporations don't have something called guaranteed profits because profits aren't guaranteed.
Well, isn't all a chance? Like it's up to you to make the business work.
Exactly. It is up to you to make the business work, right?
Yes.
So if the business succeeds, you pay more money to everybody, right? So if the business fails, you don't get to pay less money to people.
But what if a business succeeds 1 year or a couple of years and you increase pay, then the next couple of years business loses money, you're still paying those higher rates than normal. Is that what's going on here?
Yes, right? So that's the argument, right? Yeah. So when you are a successful business, profit isn't necessarily profit. Profit is expansion. It's adding employees. It's adding services. It's taking risks. And it's also recession proofing. So meaning that if you have a business and you make money and when hard times come, you are saving your profit to still pay everyone the same wages. You don't get to go down, right? So when people think of businesses making large amounts of money and reaping in the profits and saying they're making so much money, they're not thinking that the businesses also lose the money when bad times happen or recessions happen and people don't have any more money. Like during the recession, McDonald's was booming because they have cheap food, and now they're declining because people are out of recession and they don't have to go to McDonald's anymore.
Yeah.
So people are still demanding they get paid the wages, right?
Yeah.
But they're not demanding that McDonald's turn a profit.
Mm-hmm.
So think about that.
I'll think about that.
Just think about that. Everyone have to think about that. Now, what am I saying? Stop it. I'm not saying Trump. I'm not saying Hillary. I'm just saying, think about it. Is it fair? Taylor said it was when we talked about, he said it wasn't fair when we talked about lowering the tax rate like everyone else out there did, right?
Yes.
But now, me telling you what a business goes through, you might have to think about that a little, right?
Well, it comes to, you come to a more harsher reality of, well, you take the chance, so it's on you. That's on you.
Yeah, so basically, what you're saying is a tax rate depends on the business.
Yeah.
Depends on the business, right? And are there more businesses that are more profitable than others?
Well, yeah, it depends on what market you go into. It's all, there's so many factors. Like the market you go into, if you go into a market that's booming at the time, then you make some profit. If you go into a market that's not booming, you're going to struggle. So you don't make profits, but you're still going to have to, pay everybody the same and as they would.
So
you may not see profit in a couple of years, to catch up with yourself and go in the black. But I'm just saying.
So what's the Joe solution?
Never try.
Higher margin businesses?
Yes.
With lower risk and that aren't susceptible to market swings and declining revenues?
Oh, was that it?
Should get taxed more.
Okay.
That's the Joe solution.
Gotcha.
And you might say I'm a socialist or whatever the hell you might say that, whatever. But I'm saying when Apple makes, they have $700 billion market cap or market share right now, and they're talking about buying Disney. Hey, for another tie-in with our We Tell You show.
Yeah.
Maybe we should think that we should maybe not attack so much the companies with slim margins like fast food restaurants and how much they should pay their workers. And we should be attacking the companies that enjoy massive revenues and huge tax breaks because they're friends with the government. And maybe the ones that are basically like Sears, stuff like that, have to pay all these workers, should get more of a tax break when they have tough times. Like we gave the bailouts to all those banks and didn't put anyone in jail in the financial crisis, right? So think about that. Just think about it. Think about it. That's all I'm asking you, Taylor. That's all I'm asking.
How about then that you would have to have somebody go each quarter, every half quarter, every 6 months or so, and see, or you can see what businesses and what you have to have so much work to go through all the different business types, different areas of business, and see who's making the most money there, and then help out certain people. You're cherry picking people. Say you don't make enough money, so you can get help. You can get help. They're cherry picking, and then when that becomes an issue, people who granted are getting the help, who don't need the help or have a lot of money, but are saying why are they getting cherry picked and I'm not, and then you would cause a huge financial issue, right?
They do it now with subsidies in healthcare and corn and farming and oil and gas, things like that. So they do the cherry picking now. So the tax issue of the corporate tax rate is way more complicated than just giving a tax break to the rich. See how your mind is like turning with all these questions, right?
Yes.
Do you see how complex that is than just saying you're giving a tax break to the rich?
Isn't it written that way so people don't understand fully? It's just like they don't. I don't understand it. So
like
whatever.
Already it's upsetting you and you're going crazy in the background and you don't. So the corporate tax rate and reducing the corporate tax rate, it's not that easy, right? Yeah. And that's what I'm saying to everyone. I'm saying is it's not that easy. Everyone is not making money hand over fist just because they have a business. And just because something is profitable one year or now doesn't mean it'll always be profitable. So think about that when you're thinking about tax code. So do we agree with it on the show? Not agree with it? We're a business, so we agree with it. Thanks, Trump. Just saying that over there. Border adjustment tax. I don't know if I want to get that. This is okay. Slight adjustment individual tax rate. This is where it really affects everybody, right? Slight adjustment individual tax rate. Okay. They want to do it to 3 tax brackets. They want to do it at 10%, 25%, and 35%. the code would be simplified, whatever that means. It would, basically, you wouldn't have so many tax variations. So right now, he wants to double the standard deduction rate. You're going to know about this, Taylor. Everyone who is regular earners and middle class should know about this, right?
Okay.
This would allow individual filers to deduct their first $12,000 in income from their taxes and $25,000 for joint filers, opposed to the current $600 for individuals, $12,000 for joint filers. Remember that?
Yes.
We just went over this, right?
Yeah.
So we were just going over it with Taylor's tax situation, and they want to double the deduction rates and eliminate itemized deductions. Remember, we just freaking went over this, right?
Yeah.
So what does that mean for people that are middle class regular earners? You know which category you're in mentally off hearing about that, right? So would that help or hurt the middle class?
Wouldn't that hurt? You're taking out
No, if they're doubling your deductions.
But the itemized stuff. What if people depend on itemized things other than the actual deductions?
Exactly. That's a question, right? So people that depend on itemized deductions, right? You do itemized deductions.
Yes.
So does your wife.
Yes.
Okay. Now, before you did itemized deductions, what was happening to you?
Standard,
So you were losing money.
Yeah, pretty much.
Exactly, right? So how much more time is it and how much more effort is it to do itemized deductions and do all your accounting to do it right?
It's up to you. It's a lot more work if you do it at the end of the year before your taxes, but if you do it each paycheck or each month or so, it's not work. No work.
Is it more work than filing a 1040 or doing the regular tax return with deductions?
It's a lot more work, but it's all depend on how much time, when you start yours and when you do it.
And when did you start itemizing your deductions?
I started at the beginning of the year. After last tax season,
No, when did you start on your taxes? What year did you start?
Oh, maybe I start. I'm lost.
What year did you first itemize your deductions?
Oh, about 4 or 5 years ago.
And why did you start itemizing your deductions?
Because we spoke together.
Because somebody told him, right?
Because Joe told me I
so
get more money.
So what you're saying is that if you know somebody and have the right person and can pay the right amount of money and are advised correctly, you can benefit from itemized deductions on your taxes.
I doubled my money back.
So you're saying that if you're privileged,
Jesus,
that you're able to get more money back, right?
Privileged meaning I know Joe.
Or you know a good tax person, right? Or you know someone who can do this information for you, right?
Shady McShaderson.
But most of the people watching this right now don't even know that person or even know what this is. So would that hurt or help people like Dre, our poor example? What would that do? What would that do? He's so mad right now.
I guess that would hurt him.
He's so furious.
So we get fuzzy questions.
Would it help or hurt him?
I guess that would hurt him.
No, Trump's plan. Not.
I don't know. God.
Okay. If he doesn't know me, it hurts him because the current way it is, he has to know somebody who knows to do this, to know to do that, right? With the Trump plan, if you double your standard deduction, it would help people like Dre.
Sounds good to me.
So would it help or hurt the middle class people?
It's help, I guess.
It would. It would help them. So it's a lie. They're telling you that it's not going to help middle class people, but it would help middle class people. Yes, it would help them. So the next one is the one-time repatriation tax. We're gonna skip over that because Taylor's crying in the corner with all this math.
I don't know what to do.
Yeah, exactly. Sorry, all of our things are going long today. Sorry.
Oh man.
So Trump wants to also do a one-time repatriation tax, which would allow companies to bring back money from overseas with a slightly lower one-time tax, right? Who does that help or hurt? It doesn't help us, right?
No, not at all.
We're not repatriating money, right?
No.
Eliminate the estate tax, right? When you inherit tax, I believe it's like $5 million. If you inherit over $5 million or whatever, you get taxed on the estate, or you get taxed at the end of life when you give it to your family members. Would that help or hurt the middle class? It doesn't really help. So
middle class really doing $5 million?
No, they're not. No, they're not. They're never doing that ever. I know them. They're not. A change in tax exemptions, according to that, will increase the standard deduction for individuals, eliminate itemized deductions. So they say that itemized deductions are loopholes. We know from doing itemized deductions, they are certainly loopholes.
Yes.
And there are certainly ways you can get away with things and not get away with things. We know this, okay? So he wants to eliminate those, and he wants to make it for, what was it again? He wants to make it for individual tax. Okay, individual tax rate. The pass through. Okay, so whatever. He wanted to keep deductions for kids. I'm not seeing it right here, but he wanted to keep deductions for kids. He wanted to keep deductions for mortgage, insurance, things like that, whatever. So basically, middle class people that have things would get to keep their deductions. Okay? Mm-hmm. Middle class people that don't have things would double the deduction rate. So his tax would certainly help the middle class. It would certainly help people who own homes, so people who have kids and pay for services. So it does, no matter what you've been hearing in the news, things like that, it would help you. It would help. So that's our conclusion on this show. Repealing the alternative minimum tax. Do you know what the alternative minimum tax is?
No, please inform me.
It is, if you have large amounts of deductions, it calculates your income tax under the normal tax rate, and it gives you an alternative, and you pay the higher amount. So basically, if you make a large amount of money and you dwindle all your expenses down to a certain amount of money, it will, I'm like going crazy, my hair is going crazy. It will still allow you to pay a certain amount because you make so much money. So if you make, it would affect, it applies to roughly 5 million people. They're wealthy individuals, right? And there's no infrastructure spending in his tax plan. It's just a tax plan. He also wants to repeal the 3.8 tax on net investment income. So a lot of these taxes help people that are making more money, but saying that they don't help people that are middle class is a lie. It does help people that are middle class and people with lower incomes. It just does not help people with the lowest of incomes. But in regular tax brackets for regular earners who earn a regular wage and they earn a middle class wage or lower middle class wage to even upper middle class wage, it will help those people. So did that help answer your questions about the tax plan for Trump? Sorry, I'm putting shade over here.
Yes, you are.
I'm getting bored, so I'm like moving around, going all crazy.
Yes, that helped me out.
Did it help?
You threw a lot at me, Joe. You really did.
I did throw a lot at you, so I did, and everyone else out there. So does it help people that make money? Yes. Does it help people that are middle class? Yes. Does it help the very poor? No. You know why? They're not paying taxes anyway. Boy, are you guys going to be so mad. You're going to be so mad. If you don't pay, like, here's the thing. If I was making money under the table and I'm not paying taxes anyways, well, why would I get a tax break? I'm not paying anyway, so it doesn't matter.
Yeah.
So it affects people that are paying the taxes is what it affects. And it lowers taxes for everyone is what it does. So how's Trump going to pay for stuff if he's lowering taxes for everyone? Well, I don't know. That wasn't covered in the show. We were just covering how it would affect you. So that's that. Next week, I'm going to talk about some other stuff on how to help regular things, but this was our 2 weeks of Trump. How do you like that, Taylor?
It's a lot for me to edit, so.
There's a lot for you to edit. It's true. Thank you. See you guys next week on Joe Tells You.